Jared Blikre here now to break this down for us. And Jared, despite those beats, we're seeing both of those stocks coming under some pressure here.
That's right. We took a look at the price action about 30 minutes ago and kind of tied it all together with the CPI report, those high inflation numbers that you were just talking about. And you can see it's kind of a double whammy here. Goldman Sachs, by the way, after the report was released earlier this morning, around 6 or 7 a.m., it popped about 1.5%. Results were very good, as you said. JPMorgan, not so good. But these stocks are only down, 1.4% with JPMorgan, Goldman Sachs down 0.7%. I do have some analyst commentary to add, and this is going to be on JPMorgan. So Credit Suisse is saying a solid quarter is in the books with market-related activity, consumer spending levels, and credit quality, all underscoring the strength and the speed of the economic recovery. But they're saying the lingering question is when that strength will translate to higher interest rates and loan growth. So because of that high CPI print that we saw this morning, the yield curve actually contracted. It flattened a bit, and that is makes it more difficult for banks to make money. Here's another comment on JPMorgan by Wolfe Research saying there was a number of positives in the quarter, but higher expenses and the net interest income miss could overwhelm an otherwise strong second quarter. And now I want to move on to Goldman Sachs. I have Evercore saying, while everyone will doubt the sustainability of these capital market numbers and equity gains, as they should, we continue to think iBanking will remain very strong. And that relates to the M&A activity, which is at a record for many of these banks. I think it was the second best quarter for Goldman ever. And their pipeline is pretty strong as well. A lot of deals that still need to be done. Also, Evercore is saying there's not much to complain about. So let's move on to Vital Knowledge, not as sanguine as Evercore, saying the quarter wasn't as spectacular as the headlines would suggest, saying the strong results from Goldman's asset management unit were helped by markups and incentive fees. Alexis.
All right, I want to talk about these mega cap tech stocks because there's interest in them once again from investors, but that doesn't seem to be helping the overall NASDAQ composite, which is actually lower right now. What are you seeing at play there?
Yeah, this is really interesting. We've seen the mega caps kind of carry the water for the NASDAQ over the last 6 weeks. You can see we have kind of a mixed board today, but even though Amazon's underwater by 0.8%, it still reached a record intraday high earlier today. And here you can see it just sank into the red over the last hour or so. Also making record highs today, Google, which is Alphabet, Microsoft, and Apple. So the only original FANG stock not making new highs right now, besides Facebook, which is close to it, is Netflix. And that's really a story for another day. But I was looking at the breadth of the market itself. And this is going to be the NASDAQ. Let's get to my other slide here. This has to do with the number of stocks that are pushing and making new highs with the market, or at least advancing with the market. And you can see this purple line here has been trending down for some time. And even though we rose to another high, it looked like we were going to maybe reach a record, it's been selling off again. So that just means that there's not a lot of participation within the NASDAQ. And if the mega caps go down, well, and there's nothing else to pick it up or pick up the market, then we're going to have a more broad-based sell-off.
All right, I want to talk a little bit about Nokia, higher after raising full year earnings estimates. I have to think that's going to help the overall sector.
Yeah, and guess what? I almost forgot. This was a meme stock. So I was looking at the chart, and we have a huge spike in January. Let's go to the Wi-Fi Interactive again, and I'll do a year-to-date. Yes, and you might think this is a biotechnology stock. Not the case. These are candlesticks. If we do it on a line basis, you can really see what's happened here. What's interesting is also like AMC and GameStop to a degree, they've been able to hold on to a lot of these gains here. And there is actually some fundamental news for Nokia. They said that they're going to raise their guidance when they deliver their earnings report later this month in a few weeks. So it's been kind of rough for a lot of the meme stocks just recently, but let's check out what's happened over the last month. Kind of a mixed board there. 2 months, and we'll go up to 3. There you go. And now 3 months. You can see Nokia up 41% over that time period.
Wow. All right. And of course, the Emmy nominations now out. Who are some of the winners among some of the big name media brands out there?
That's right. HBO, probably the biggest single winner. If you combine Warner Media's HBO and HBO Max, then they won 130 nominations. But Disney, which owns ABC, actually gets a top title because once you strip out their streaming network, by the way, Disney Plus had 70 nods for their Disney Plus streaming service, but they have Hulu, ABC. When you put it all together, I'm getting these numbers here, 146. That is just an amazing sweep. And let's go to I'm going to go to our streaming heat map so we can see the performance. This is over the last 3 months. I'll get a year-to-date view because I have a couple more facts. Among the individual shows, The Mandalorian, that's from Disney, and The Crown from Netflix, they both tied for the most nominations. They got 24 each. And overall, the nominees that were reflecting the dominance of the streaming services, they accounted for more than 300 nods, and that's more than cable and broadcast TV combined. So it just kind of shows you where we are in the streaming world right now. A new paradigm, Alexis.
For sure. All right. Thanks so much, Jared.